Hi, I'm Eric Theoret, currency strategist at Scotiabank. Oil prices have fallen considerably from their 3.5-year highs reached in early October. The prices of two major benchmarks, Brent and WTI, fell about 35% over the course of an 8-week period ending in late November. Domestically, Western Canada Select neared a historical low just above $10 a barrel, forcing the government of Alberta to implement an emergency curtailment of some of the province's production starting in 2019. As a result of the recent oil price shock, we've updated our bank-wide forecast and made significant adjustments to our outlook for interest rates, commodities, and FX. This oil price shock has forced an aggressive reassessment of the market's tightening expectations for both the US Federal Reserve and the Bank of Canada, and markets have almost fully priced out any hikes from either central bank in 2019. We remain constructive on the fundamentals for both the Canadian and US economies, looking to above-trend growth that supports inflation around the 2% target. In terms of our forecast, we have 3 25 basis point hikes for both the Fed and the Bank of Canada in 2019, and one additional 25 basis point hike for Canada in 2020. We're also constructive on the outlook for oil prices and have an annual average price forecast of $60 a barrel for WTI in 2019, with modest strength into the end of our forecast horizon. The discount for Western Canada Select is also expected to average around $20 a barrel in both 2019 and 2020, well off the record $50 a barrel differential reached in October. This outlook is supportive for the Canadian dollar, given the anticipated improvement in oil prices as well as the outlook for relative central bank policy. Risks to our Canadian dollar forecast center on the price of oil, given its renewed importance to the Bank of Canada. The most recent Bank of Canada policy statement specifically tied the stance of monetary policy to the persistence of the oil price shock, as well as business investment and an evolving assessment of the economy's potential capacity. As we close out the year, we will likely experience traditional seasonal trends in the Canadian dollar and its tendency to weaken into year-end and typically base around the end of January. We're expecting the Canadian dollar to end 2018 around 75 cents and strengthen towards 80 cents in 2019. You can find more thought-leading content on our website, and you can also follow us on Twitter at ScotiabankGBM, at ScotiabankFX, and on LinkedIn. I'm Eric Theoret. Thanks for watching.